Hi guys, this is Mike, MBQB11 from the James 16 group. This is going to be the first video in the beginner series of videos that I'm doing. And it's just going to be a basic introduction to what is Forex, what is the foreign exchange market, a little bit of what to expect, what goes on, who participates. So it's going to be a brief video, but hopefully it'll give those of you that are new to the Forex market a little bit of a better idea of what's going on. Okay, so first of all, what is the Forex market? And in the most basic sense, what is occurring is the buying and selling of money. One person's buying, another person's selling, one person's selling, another person's buying. So let's just define the foreign exchange market, and this comes off of Investopedia.com. And they write, the foreign exchange market is a place where currencies are traded. The overall Forex market is the largest, most liquid market in the world, with an average traded value that exceeds $1.9 trillion per day and includes all of the currencies in the world. So basically the Forex market is huge. It's larger than any other market, and it's the most liquid market. And what that means is that there's so many transactions occurring that there's a lot of money exchanging hands. So it's very easy to get in and out of the market. Okay, so a little bit more about buying and selling. So if you want to buy a currency, say you want to buy the euro versus the USD, when you go to purchase that currency, the only way to purchase it is if somebody else is willing to sell you it. So no transaction can occur if there's only a buyer or if there's only a seller. So that's like if you are just out at the store and you want to buy something, and you go to the cashier and you say, here, I want to buy this item. If they're not willing to sell you that item, you can't have that item. And the same thing goes if you want to sell a currency. If you want to sell the euro versus the USD, somebody has to be willing to buy it. So the only way price can move is if someone wants to buy and someone is willing to sell. So that's the only way prices will ever move. If the markets are only filled with buyers, then the price will remain stagnant. It will not move. But the thing with the Forex market is there's always buyers and sellers. It's just a matter of what price or how much amount you can get it at. So as a retail trader, it's just important to know that for prices to move, there has to be both a buyer and seller. Okay, so who uses the Forex market? Who are some of the participants? And the main category that I want to focus on are the speculators, because we are speculators as traders. And the definition of a speculator is somebody who's trying to profit from the fluctuations in price. So as price moves up and down, our goal is to profit from these movements. And some types of speculators are banks and institutions, and I have in quotes the big boys, because these are the main speculators. They have the most amount of money, they're making the most amount of transactions. And these include the central banks, which are, for example, like the American Federal Reserve in the United States. And when the central banks do something, it usually has an effect, a larger effect on the market, because they have so much buying and selling power, which means that they have so much resources and money behind them that when they make a move in the market, it is reflected a lot larger than somebody with a lot less money. Other types of institutions are investment banks. And you have the hedge funds and mutual funds. So these groups are all speculating in the market. Maybe they're all doing it a different way, but in one way or another, they're trying to profit from the fluctuations in price. Okay, and then you have the little guy. That's us, the individual. And you will also hear us referred to as retail traders. And what a retail trader is somebody who's trading through a smaller broker who has a lot less money, but our goal is still the same. Our goal is still trying to make profits from fluctuations in price. Okay, finally, I just want to briefly talk about what are the other uses for the Forex market. And in reality, the Forex market was never created for speculators. Like, that's just a secondary reason why the Forex market is there. The main reasons for the Forex market are the exchanges of currency between different countries. So to give you the most easily understood example is if you go to travel from one country to another, you have to exchange your home currency for the country's currency that you're going to be in. So the way to do this is to participate in the Forex market. But you might not personally do it yourself, but whatever bank you go to or whatever place you go that exchanges your money, one way or another, somewhere down the line, that money is being exchanged, and it's being exchanged through the Forex market. That's the vehicle which that money gets exchanged. Other people that use the Forex market are businesses who do business overseas, and they need the Forex market to transfer money with their contracts. So all that is really the main reason why the Forex market is there. The speculators we're called the grease on the wheel, so to speak. We create liquidity, as we talked about in the beginning. We create an easier way for people to get in and out of the market. Okay, so when can you trade the Forex market? And the Forex market is different than all the other markets in the world because it's not a centralized market. And what this means is, to give you an idea, is the stock exchange is a centralized market. That means it opens and closes at the same time each day, and all participants go through one specific place. Whereas the Forex market, there's no one specific place to trade with. Instead, there's a network of banks and individuals that is around the world that people can trade with. So, for this reason, the market's actually open all the time. Now, I wrote that the currency market is a 24-hour, 5-day-a-week market, but in reality, it's a 24-hour, 7-day-a-week market. The reason I say 5 days is because most brokers, as you'll notice, are only open certain times. They close on the weekends. And the reason for this is there's not many transactions are occurring. The markets are technically open, but they're really not open. All those transactions occurring over the weekend are off-hour trading. So the most trades are going through during the week. And the most transactions are occurring during the London time, which is 3 a.m. Eastern to 12 p.m. Eastern, followed by the New York time, and the smallest amount of transactions occur during Tokyo. So those are the active sessions, even though the Forex market is open 24 hours a day. How do you trade the market? Well, there's two main ways of trading that we need to focus on, because these are the most talked about ways for speculators and retail traders, and what we're going to be focusing on in the James 16 group. So the most important to us is going to be technical analysis. And technical analysis is primarily the use of charts to observe market behavior. And what that means is we use charts to observe reoccurring patterns in order to identify high probability setups. So we look at these charts every day and we find patterns such as pin bars or inside bars. We look for support and resistance, and we try to define when is it going to be the best time for us to get in and out of the market. What is the highest probability for us to get ourselves into to make money? Now, the one thing you must remember, though, is that there's no guarantees in the Forex market. There is no 100% sure winner that is ever a guarantee. Instead, we just look for high probabilities. So if we can get the probabilities in our favor more times than not, we can make money in the market. And this is what we're going to focus on, and this is what James teaches, and the other instructors teach, and I teach, and this is our goal. The other way to trade is fundamental analysis. And this is not going to be a huge talked about thing in the James 16 group. There are individuals who are heavily into fundamentals, though, so don't get me wrong, but in general, the most important thing we focus on is technical analysis. So I'm just going to briefly talk about fundamental analysis, and that's the use of identifying the factors that drive an economy and reflect in the currency. So that could be economic or political factors, and the idea is for the individual is they try to decipher what it is that is really driving the currency. What is really driving that economy at that time? Is it high inflation? Is it this economy in a recession? So using all these political and economic factors, you try to make a high probability guess about what that's going to do to the currency. Other ways people use fundamental analysis is through news trading. You'll often see that every day there's tons of news announcements coming out, and people try to use the actual news announcement to make another high probability guess about where the currency is going to go in the short term or in the long term. Then you have people who combine both. You have fundamental and technical analysis traders. So they'll have the fundamentals give them a background of where they think the currency should go, such as, okay, the USD is not doing well, so I'm looking to not buy the US dollar. Then they use technical analysis to time their entries. So there's a lot of different ways to trade, and you're going to have to find what's most comfortable for you. And that's only through trial and error and a lot of practice and screen time and a lot of hours. Okay, so finally, so what do you need to be successful in the Forex market? Well, this is only a brief little list, but each of these topics are much more detailed than I could list in one video, and this is what you're going to experience in the James 16 group. You have the money management psychology by Fiji Trader, you have the trading strategies by James 16, and you need a long-term outlook. So let's just briefly go through each of these. And the first is money management, and this is, I would say, the foundation of your trading, because money management is what's going to keep us in the game longer, and it's going to magnify our profits as we do well, and it's going to cut back on our how big we're trading when we're doing bad. So you need to spend a lot of time in Fiji Trader's section, and he does just an absolutely amazing job. And I feel so lucky to have found the James 16 group with Fiji Trader there, and he really just does an excellent job. Next, you have psychology, and for me, when I first started Forex, this would not even be something that I would ever even think about. I just thought, you sit down, you look at a chart, you pick away, and you trade. And in reality, everything you do is somehow has some psychology behind it. Just for example, let's say you have an entry that you like to take. So you take that entry every day, but you decide one day to exit early because you're fearful of the market, or you try to stay in too long because you're too greedy. And I think I could safely say we've all been there. We've all been greedy. We've all been fearful. And we all have our own little demons that the market will make evident. And you need to get a handle on those. And, most people are not qualified to talk about psychology. I certainly am not. But we are lucky to have Fiji Trader he's just going to really blow your mind with his stuff. And it's such a popular topic for good reason. So make sure you stick into his section and you really read it over and over again. Next is the trade plan, or the trading strategy. And this is what James 16 and Dialist has with his knife, and some of the other instructors teach. And this is the core of what you're going to do day in and day out. How are you going to approach the market? We talked about technical analysis, and that's what this part of it is about. It's about having an entry plan, having an exit plan, being able to manage your trades, understanding what is taking place when you go to sit down and trade every day. So each of these topics are really important by themselves, but they're also extremely important together. Everything has to be integrated into one big trade plan. And finally, I made this a topic because I think this can't be stressed enough, and James had an excellent post about treating trading as a business, and it really opened my eyes to everything. And it's to have a long-term outlook, not to try to be in this to get rich quick. I think most of us are turned on to the market because we believe there's just so much wealth to be made so fast. And the truth of the matter is there is a ton of money to be made in the markets. People make tons of money trading Forex market and the other different types of markets. But you can't look at it as a get-rich-quick thing, because it's not. It's a long-term. You have to devote a lot of hours. I don't know any successful trader who hasn't poured so much of themselves into their trading and really given a lot up to get to where they are. So you have to be ready to do that. If you're not, I can honestly say I don't think you're ready to trade the markets. You're just going to have a lot of frustration, and it's not going to go the way you want. But if you change your outlook to a long-term outlook, you treat it like a business, and you be prepared for the ups and downs, honestly, in the end, you can be successful, and you will be. So this was just a brief video on what to expect a little bit about trading Forex, and let me know if you guys have any questions. Thanks.